Hey everybody, Chris here. So as we still seem to be in this bearish market, the question is, if you're ready to buy some crypto, how do you do it? Are you waiting for dips? Are you dollar cost averaging? Or when you start to see crypto go up, do you FOMO in? We'll be covering all of that as well as some of the latest news that's going on. We had an interesting trading day on Wednesday with some CPI data coming out. We'll show that and show how the market reacted to that. And then following a bit of a dump. And when we had that dump, it was like, what is going on? How is the crypto market being manipulated? Or is that what's happening? FUD in the market. A lot of that happens during a bear market. So I say we're still kind of in this bearish market in that we still don't see the huge gains that a lot of us are expecting. But if you watched my 4-year cycle live stream that I had about a month ago, you would know that we're not quite ready yet for that full bull market if indeed those 4-year cycles continue to hold. We'll be talking more about that in the future, but for now, we're sitting at this point where there may be some further dips, there may be another dump coming, and will you be ready to buy, or do you just not care about that and you dollar cost average? So let's get into that. We'll show the news and a little bit in the charts. I'll show you what I'm looking at. So we'll start here with a recap from the news on Wednesday, where we had a good inflation data came out. This was this CPI rally. This was the United States inflation numbers for April that came out, and it was lower than what was mostly predicted. Again, I just don't take a lot of credence with the numbers because they manipulate them a bit, or they go ahead and they get some more data later on and they change the numbers. They've done that a number of times in the past. I told you guys that that was going to happen, and sure enough, here we are again. But the market responded, it jumped up, and then it turned around and fell again. So we had this big green candle in the morning for Bitcoin, and all cryptos really were going on a big run, and then it turned around and dropped back down with a big wick hanging down there. And that was based on what is understood to be some false data about the United States possibly dumping Bitcoin on the market. And a lot of people were going, oh, this wallet, it's ready to dump Bitcoin. And then other people started selling. So that's that typical market manipulation that you see. Yeah, kind of tough to believe that Bitcoin can change in price that much, and how much all the other coins are dependent on Bitcoin, because we saw it all through the market. So we'll look more about that. So how low can the Bitcoin price go, though? And that's what we're talking about here, is a lot of people still talking about Bitcoin maybe dropping below 20K back to 15K. I think there's going to be this big dump in Bitcoin, and others are like, no, it's not going to happen. There's so much liquidity there in the 20s that it would never drop that low. We don't know. We don't know, but we can look at some charts and we can say, hey, look, it looks like there's some technical patterns. And here's one, a bearish technical pattern that's hinting at Bitcoin's price going down. This is typically what we see when we have what's called this head and shoulder. So we've got the left shoulder, the head, and the right shoulder, and then a possible downside target there. So on my chart, here's the Bitcoin daily chart here, and what we're looking at on the chart here is this would be the left shoulder, and here we'd have the head, and then here we have the right shoulder, and that possibly Bitcoin would come back down to about this level here. This is 25,200 that I've identified here. This was over here, this was resistance, finally broke through that resistance in March right here, and then this would be the classic head and shoulders symbol here that we could come back and retest 25.2. I am tracking, however, this orange line here, where on the daily we're actually seeing higher lows. And yeah, there's a little wick that may go down quickly, but overall with these candles we're seeing higher lows on Bitcoin. So that's looking at possibly what could transpire. Again, in technical analysis, you need the confirmation before it's true, but a lot of people have been tracking this kind of movement. We also have what's going on in the world of meme coins with the rise of Pepe, and then we have BRC20 tokens. Coinbase came out with this newsletter basically talking about the meme coin frenzy, and this whole newsletter that Coinbase did was all about saying, be careful out there, be careful. I know a lot of us having fun, Dogecoin with Shiba, Pepe, and others, and again, only invest what you're willing to lose because you don't know what's going to happen with these. And we've been talking about Pepe on my live streams, and there is definitely a risk there. And when we look at the Pepe coin right now in terms of how it's trading, this is on the daily, and this is setting up exactly what I was looking at in terms of this possibility of having this big rise and then this big dump. And so, and I had charted this about a week ago, that was always a possibility, and it is playing out on the daily chart here, very much like that. If we go to the 4-hour chart, you'll see that the sell-off of Pepe tokens continues, and be careful with this. Could it go on another run? Maybe, if enough got behind it, but typically when we see this kind of sell-off, the meme token that really doesn't have a long-term community viability, a lot of people buying in, trying to get quick profits and then get out, is going to leave a lot of bag holders up here. So be very careful with that. But this newsletter here that Coinbase made has really irked some people, especially on crypto Twitter, basically saying, stay away from Coinbase. Coinbase is evil. And I think Coinbase is just trying to look out for the investor and warn investors to not get too wrapped up in a frenzy of something like this. But this doesn't help. Again, only put in what you're willing to lose. Be careful out there. That's what I say. But when it comes to FOMOing in, that's what a lot of people have done with Pepe. And so we look at this crypto investment. There's this approach you can take, which is just dollar cost averaging. And you wouldn't do this with meme coins, most likely these meme tokens, because those are quick hits that you kind of want to do. Again, if you're just investing and with a little bit and making some little profits, the actual number of people that buy a token and then make millions of dollars is so few, and it is true gambling. Most of those already know what's about to hit. They're friends of the devs or the devs themselves on these tokens. You gotta be careful with that. But with dollar cost averaging, basically, you just regularly invest a fixed amount of money. Like once a week, you're just gonna buy some Bitcoin or some Doge or something, and it doesn't matter what the price is. You just buy a little bit at a time. Typically, when we look at these a bear market, we know the price is most likely going to be higher in a year or so. So does it really matter if you're buying at 7.2, 7.4, 7.6 when you think it's going to be 15, 20, 30, 50? You start saying, well, it really doesn't matter. But there are many exchanges where you can just use this continual buying. Robinhood can do it, and Coinbase can do it. You can set it up on a number of different exchanges where it just automatically makes a purchase for you. And you don't have to even think about it. It just makes the purchase. It could be once a day, once a week, whatever you want that interval to be set at. And you're not investing all your money at once. If the market dips even further in the coming months, you're just buying all along, as opposed to putting it all in now because you think, oh, this is going to be the bottom and we're going to go on this big run. And then it doesn't go on a big run. It goes down. So you kind of have to watch that. But yeah, when you start to see this bit of a run, this would be FOMO. So this is fear of missing out. This is FOMO right here, fear of missing out. And sometimes the FOMO actually works because based on indicators, you might see the market starting to go up and you say, okay, this might be it. So you take the cash you have available and you put it all into the market, then into whatever coins you've been tracking. And it works out because the market does continue to go up. So you got to be careful with that, though. You got to know what you're buying into. You got to be ready for some of the FUD that's out there. That's this fear, uncertainty, and doubt. But sometimes that FUD is true. For instance, on Gala, for instance, Gala was one that, because of this conversion they're going to be having, they're calling it airdrops to a version 2 of the Gala token. They're saying that a lot of people, a lot of wallets, a lot of exchanges aren't going to be able to do that so-called airdrop from V1 to V2. And they're saying to move your tokens to a wallet or an exchange that is actually going to support the airdrop. And as soon as I saw that news, I was like, this is going to be trouble. And I had Gala. I bought it up here at 39. I sold at 37.7 right here because I knew this was going to be a challenge. Even though I like the Gala project and I think it's going to do well, I was like, yeah, I got to get out of this because this doesn't look good. And Gala has really come down quite a bit since then. And the other is Jasmy. Jasmy got moved from the main Binance exchange into this innovation zone area where they also have Pepe and Floki and others saying that we're not sure that the Jasmy, along with like 8 or 10 other tokens that they moved off the main exchange into the innovation zone area, so to speak, which flags these as possible risks, be careful kind of thing. And that was a negative thing. And Jasmy really jumped down in price there. So I sold my Jasmy. Now, this was overnight. I woke up in the morning with a notification about Jasmy, and I was like, okay, I'm going to get out of this right now. Maybe buy back in at a lower price or buy into something else. I haven't decided yet. So those kinds of things happen with trading. And where is this bottom going to be with Jasmy? Is it going to turn around and come back up, or is it going to continue to fall down? Not too sure. One of the things I'm looking at again is ETH, and whether ETH as a deflationary token now is what it is, that despite the high gas fees that we're seeing with ETH, we're still seeing continual building on the Ethereum blockchain. Pepe, other ERC20 tokens just continue on ETH, and we see, these gains in ETH that happen because of this excitement and continual use of Ethereum for smart contracts. So we could see a dip here. Right now, I'm targeting back down to like 1804, 1800. We saw a wick come down and flag that. So could be a buying opportunity. Those are the kinds of things I look for when I'm trading. But there are different types of trading that you can do, and some are just waiting. Some have just a lot of cash sitting on the sidelines, and they're waiting for a much bigger dip to come. You might miss out, though. So those are the kinds of things that you kind of have to look for. With Dogecoin, we're looking at Dogecoin right now, 7.2. I had bought some on this dip on Monday down at 712. That was my latest Doge purchase. And we'll see whether Doge comes in and really challenges the 7-cent line and maybe comes down into the 6s again. That's certainly right now, if Bitcoin follows that head and shoulders pattern and does dip down to 25.2, we could see Doge dropping below 7 cents. So as I've said before, I'm a trader, so I like to buy the dips. Not always do I hit the dip at the lowest point, and sometimes I buy on a dip and then like an hour later it dips even lower. That happens, but I think comparing that to just simple dollar cost averaging probably evens out. But I'm a trader and I like to look for those dip opportunities, because I'm always attached to the charts and always watching the news and what's going on. So that works for me. But for those of you that don't quite have the time to that, you could set some limit orders, or you can just buy it, set it, forget it. And that would be on dollar cost averaging. So let me know in the comments below what you do in terms of buying. Are you waiting for another dip? Are you just holding now and not doing anything because you think there's going to be some huge dump coming this summer? Let me know. Give a comment. Give the video a like. If you haven't already subscribed to the channel, please do. I appreciate the support. We'll see you next time.